Hey, it's Mark Alexander with Benchmark Mortgage. So excited to share with you guys my March 2025 market report. I'm going to dive right in, and I titled this Rates Are Falling. And the reality is rates are falling. And if we look at the last 7 weeks, we've seen a consistent drop in mortgage rates. But I really wanted to share with you guys some real data. It was a live time of what's going on with mortgage rates and also some data behind the housing market, appreciation, and some things with home buyer data. So let's dive right in and get to it. So the mortgage rates, if we look at the last 60 days, this is a chart going from basically from today back to January 12th, so a 60-day period or a 2-month period of mortgage rates. We've seen the 30-year mortgage around 7.2 to 7.3 earlier this year, and in 2 months we've seen rates go down to about 6.7 to 6.8, so about a half a point move lower in interest rates, which is a pretty significant move in such a short period of time. And some of the reasons why that's happening is, we're seeing some cooling of inflation. This is a chart showing the PCE, the personal consumption expenditures, and also another metric is the CPI. But we've seen inflation stay lower than when we saw it back in 2022, which is a good sign for lower interest rates. We've also seen, tariffs coming out that have caused some uncertainty in the economy. With stocks falling, we're seeing, a flight to mortgage bonds, which would drive rates lower as well. And then we've also seen some weak jobs reports or jobs data, which is basically indicated that maybe rates will come down more, or hinting that the Fed could drop rates more. And so these are some of the things that are moving rates lower right now, and we've got to keep our eye on this. But there is an opportunity for buyers right now. And if you look at, really even small rate changes can affect home buyers' buying power. And so if we look at this right now on the screen, we have a $500,000 loan amount, $750,000 loan amount, and $1 million loan amount. But this is just a good kind of snippet or screenshot to see, well, how has rates dropping affected borrowers' monthly payments? And so I won't go into this obviously, but you can take a screenshot and look at this for yourself. It does help. And even on a $500,000 loan, even in the last 2 months, we've seen mortgage payments drop by almost a couple $100s a month, which does help. And what we're seeing right now, and this was a data from HomeLight, first-time home buyers are looking for mortgage rate buydowns. And if we look at it, 27% of first-time buyers have requested mortgage rate buydowns from sellers. And I know I've seen this personally in my own practice, which helping clients get creative and strategic as we are in a more neutral market, right? It's not a full-blown buyer's market, but it's also not a heavy seller's market right now. And we're helping buyers negotiate and get credits to help make homeownership not only possible, but more affordable, and helping them make great financial decisions. And one of the ways we're doing that right now is via what are called temporary buydowns. And so this is just a strategy that I wanted to share using a $750,000 home with a $600,000 loan amount. So client doing 20% down, for example. And you can do this with much less down. But if we look at what a 2-1 buydown or a 3-2-1 buydown, a 2-1 buydown means that if the permanent rate's at a 6.7, in the first year, the client would actually get a 4.7% rate, year 2 a 5.7% rate, and then years 3 through 30 a 6.75% rate. And the credit that would have to be negotiated to make that happen is the seller would have to contribute $13,822. The other one that's even more aggressive, what's called a 3-2-1 buydown, which means in year 1, the client is going to get a 3% lower rate in the first year, 2% lower rate in the second year, 3% lower rate in the third year, and then years 4 through 30, they're fixed back at the 6.75. And what's cool about that is if you look at the monthly savings on this 3-2-1 buydown, somebody can buy a home today and in the first 12 months have a rate in the threes and save $1,100 a month comparative to that they bought normally. And they need a $27,000 credit from the seller. So I show you this because sometimes it's better to negotiate credits than it is to negotiate price, especially in a higher rate, but also a falling rate environment. One of the best parts about this program is that this money you negotiate is yours, or it is the buyer's. So if you negotiate $27,000, rates drop and you refinance after a year, you would still get a credit of that money. The bank would cut you that check back in the mail for $14,000 left over. So it is a great option for a lot of people to be able to go in and help with affordability and getting lower rates. If you have any questions on this, feel free to reach out because we can get more in detail with that as well. As we're shifting into this market in 2025, This is a source according to NerdWallet. We have right now a record percentage of people that are planning to buy a home this year. So we have 15%, which is up from last year of 11% and the year before of 10%. And I can tell you that our applications are up internally here down in South Florida, but I'm hearing it from colleagues around the country with loan applications increasing. And this is just according to NerdWallet. So we are seeing a sentiment where people are starting to get off of that fence or get over the fence to say that, okay, now's the time for me to start doing this. Rates went up, prices aren't falling. And if we really get into home prices, this is the 20 city index, the Case-Shiller index of the top 20 metropolitan areas. Last year, we saw a 3.9% home price appreciation growth in the United States average, and Miami at about 3.28%. Now, this again could be skewed depending on neighborhoods and things like that, but this is overall a good way to see that even with rates where they're at, even with the slower market and all the craziness you're seeing on the news, we're still seeing home prices go up 3 to 4%, which is the 100-year average in America. So it's just a way for you to see like what's happening right now or last year in 2024 with home price appreciation. And if we go and look forward into 2025, home price forecast is that we're going to see about a 2.7% of the average if you take the overall 23 market analysts and companies predicting what's going to happen with U.S. home price appreciation. And so overall, it's still a bullish sign that real estate values are going to continue to appreciate moving forward, just not quite at the pace that we saw, right? And if you look at what is a normal pace, right? We saw that boom in 2020 and 2021 where we saw double-digit valuation increases or home price appreciation increases, and we saw that come down a lot due to interest rates. But we didn't see year-over-year depreciation. We saw 1 or 2 months where we saw month-over-month depreciation, but we haven't seen year-over-year depreciation overall. We just saw a deceleration of appreciation. And moving forward, we've stabilized, and this is where we're at. And so I hope this helps visualize what's happening right now in the housing market and the mortgage market. We're obviously happy to set up a one-on-one if you have any questions about anything going on right now. And if you want some more local data to zip codes or cities you're in, we'd be happy to help you out with that. So looking forward to staying in touch and hope you have an amazing day.